Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly, we start with the Asian markets. Joined the slump in global equities they have, as well as on Wednesday, as the US dollar strengthened. And of course, we've been tracking the oil prices that lost ground as well. Japan's Nikkei 225 index last traded on Monday when it closed down 3.1%, as we know that the market was closed Tuesday for the Constitution Day and of course holiday, and is also closed on Wednesday for the Greenery day on public holiday. This is the bank holiday. The stronger yen, of course, weighed on Japan's shares, with the benchmark index also falling around 8% since last week, when the Bank of Japan surprised markets by holding its policy steady. The yen, of course, retraced some of its sharp advance over the past few sessions, with the dollar-yen pair trading at 107.24 in late Asian trade. That was, of course, following the pair that was tapped in its lowest level since October 2014, when the Bank of Japan launched its second massive round of quantitative easing. The pair dipped as low as 105.66 overnight, down from the levels of 111.50 yen last week. Tracking also the European stocks, opening flat to lower on Wednesday as investors digest a raft of major earnings, which of course also been tracking the Stoxx 600 European index hovering around the flat line. Markets in the region followed the negative leads from Asia, where of course markets traded lower, as we already mentioned, over the night, and of course the oil prices rallied, which of course lost a little bit of steam. Investors will be focused on a slew of earnings on Wednesday, which will bring higher volatility for the euro. And as we've been mentioning, the shared currency fell about 0.1% to 1.1484, pulling away from Tuesday's high of 1.1616. That was its strongest since August. Against the basket of major currencies, the dollar edged up about 0.2% to 93.116, and of course that was its weakest level since January 2015. Position squaring, of course, ahead of jobs data later in the week is probably supporting the dollar against most of the major peers, as we've been tracking gold prices as well relative to the rate hike for a second straight session on Wednesday, slipping further away from a 15-month hike, as of course the dollar steadied after recent sharp losses. And of course the Federal Reserve officials that have been talking up about interest rate hikes this year, we've been seeing that the gold prices eased about 0.3% to 1281.41 an ounce in late Asian session, after dropping about 0.4% in the previous one. The United States could see, of course, 2 further interest rate hikes this year, as Atlanta Fed President Dennis Lockhart said on Tuesday, and San Francisco Fed President John Williams also mentioned on Tuesday that he would support an interest rate hike in June as long as he sees continued progress on the economy, inflation, and jobs. Oil prices have been seen stabilized on Wednesday around the 43.80 level, after falling for 2 straight days on concerns that the slowing economic growth and of course rising Middle East output would extend a global supply overhang. US West Texas Intermediate futures were down about 7 cents at 47.42 a barrel in late Asian trade, with this following 2 trading sessions in which West Texas Intermediate fall nearly 5% from an end of April, with crude pulled down by rising output from the Middle East and renewed signs on economic slowdown in Asia. Also, the most important in today's calendar, we're looking at the ADP report later in the day, also the ISM Non-Manufacturing PMI, as well as the most important trade balance. That's all from the important of today. Thank you for joining us. See you next time. Bye-bye.